So we're doing our income statement. So what do we know? We know that our income statement has information about revenue, expenses, and the difference between that would either give us a net income or a net loss. So let's go. Again, once we're preparing final accounts, any financial statement, we need to have the name of the business, the statement that we're doing, and the period for which we're doing it for. And previously we said, what does our income statement include? Revenue or expenses, and from that we will get our net income or net loss. So we'll start with our revenue, and based on our trial balance that we would have done prior and would have identified the different items, we see that our service revenues are only revenue here, right? So we would have put it in. Then next will be followed by all our expenses. So we would have highlighted all our expenses that needed to be in our income statement. So here we've listed all of them. And again, we're using two columns. We're using two columns of flow and presentation of our work. So in the innermost column, we're doing the rough work. We're doing the adding that we're supposed to be doing. And then we're carrying the final figure to our extreme right column. So we're seeing here we would have added all our expenses and we would have had a total of $3,900, right? So we have that as our total expenses. So we'll subtract that from our service revenue and we'll be left with $2,800, a positive figure. And a positive figure we know is our net income. If it was a negative figure, it would have been a net loss. So this is your income statement, simple, clean, to the point. So the next statement is our statement of owner's equity. And based on her videos and questions that we've done, we know this is what our owner's equity or statements of owner's equity look like. We start with our beginning capital. We add additional investments. We add net income, which would be coming from our income statement, right? Then we'll be subtracting our withdrawal. And then that balance gives us our ending capital balance, which is what moves to our balance sheet. So let's look back at our trial balance and identify the things that we have to go in our statements of owner's equity, right? So here, this is what our statements of owner's equity looks like. Again, we're having the name of the company that we're doing the statement for, right? The statement that we're doing, and the period for which we're doing it for. I went ahead a little bit. I hope you didn't see it, right? So we're starting with beginning capital. We're adding the owner's investment of $55,000 based on our transactions. We're putting in our net income coming from our income statement, summing that we've gotten $57,800. Right, we add it and then we're subtracting our withdrawals. You would have seen our withdrawals in our trial balance right there, a withdrawal of $3,000. So we subtract that and our ending capital is $54,800, which we'll be taking to our balance sheet. And this is your statement of owner's equity, right? But you're seeing in blue your beginning capital on June 1, 2008, right, to be zero. So why is beginning capital zero? But first, what is beginning capital? Beginning capital is what the business would have accumulated from previous years and previous periods of operations, right? But remember, this business had no prior periods of operation. This business just started, and because it just started, there would be nothing to accumulate as yet. Hence why our beginning capital at June 1, which was when the business just started, is zero. We only had investment by the owner, which was his injection of cash and the building, right? So that is noteworthy. Please pay attention to that. So after we've completed our statement of owner's equity, we can move to our balance sheet. And we say our balance sheet has information about our assets or liability and or owner's equity, right? So we're looking back at our trial balance again and looking for the things that we would have highlighted that should be going to our balance sheet. So let's go ahead. Remember, whatever statements that we're doing, the three important things: the name of the company or the business that we're doing the statement for, the statement that we're doing, and the period. So here we have our balance sheet and we're maintaining our horizontal format of the balance sheet, which looks like our T account, right? And it looks and it shows our accounting equation of assets equal liabilities plus owner's equity, as our assets are on the left side and our liabilities and our owner's equity, which will sum, is on the right side. So we would have listed all our assets that we would have highlighted and found from our trial balance, right? Then we go to our right side, we put our liabilities. We only had one and the balance there. And then we would have taken the ending balance from our statement of owner's equity and added it here. And here we'll have both sides being balanced, both sides showing assets equal liabilities plus owner's equity, as both are the same amount. So here ended this question. If you have any questions, let us know in the comments.